For more on what all of today's events do mean for an already volatile market, let's bring in Ron Insana, CNBC senior analyst and commentator, as well as an advisor to Schroeders North America, and Tom Lydon is ETF Trends CEO. It's great to have you both here. Ron, I like to hear how you think through this. Why do you think Pelosi would offer piecemeal aid for the airlines? Is it a big break in her previous kind of negotiating stance? And where do you think it leaves us on on the prospects for a bigger relief bill here?
Yeah, I'm going to quote Art Cashin, one of my favorite humans on the planet, who says that, some of these environments are like swimming through bubble gum. And I think that's kind of what we're doing here. I mean, there's no clear trend about anything with respect to the recovery trade, the stay-at-home trade that may be back in place because of what's transpired with the president. And, of course, we wish him and his wife well, and Hope Hicks as well, and others. And then there's these, concerns about whether or not the president's own situation will change consumer behavior. So I'm not quite sure what the calculus is for Speaker Pelosi, taking a slimmed down package when it's clear, given the data that we have, a larger package is necessary. So I think we see some of that confusion reflected in the behavior of the stock market today.
Yeah, Tom, what would you say? Same question. And agreed that it seems a little head scratching. And the market on the one hand is pleased at the airline piece of it, seems to be holding out hope for something larger on the relief front. But I'm curious how this will play out from the negotiating tactics.
Yeah, it is surprising, Kelly. I mean, who would have known on the announcement that the president of the United States has COVID that the Dow would actually be positive? And I think that goes to say that the stock market is not insensitive, but maybe all these things that are going on in D.C. aren't as affecting the market as much as the underlying, which is, hey, we're just about on another earnings season. There's a lot of positives. Ron touched a little bit on work from home. There's a lot of momentum that we're seeing there, and especially in the ETF space. Huge money this year. We could hit another record year, and specifically in technology, communications, consumer discretionary, and the fact that the average American and the average business owner out there has embraced technology in a way that they've pivoted and made business better.
Tom, but I totally take your point, although I was going to have a little fun with the idea that the market is moving on earnings today with everything else going on. But listen, even if it is, and you're right, and the earnings kind of trends are there and they are supporting the market and moving in the right direction, but look at big tech today. I mean, look at big tech since early September. This is the segment that should be benefiting the most from everything that you're saying, and yet it continues to kind of sink and stumble. And I just wonder how you would explain that.
Well, it's had a pretty good year. FANG stocks have had the majority of the gains for the S&P 500. And if we didn't have those FANG stocks and the big tech operating, the S&P would be negative so far this year. Equal weight in the S&P 500 stocks are down over 10% so far this year. So they've done well. Sure, they've had a little bit of relaxation. But again, going forward, these companies that were the stalwarts of the last 10 years as far as growth have done very well in this work from home environment with cloud computing, communications, and all the things that we need in today's new normal in order to operate.
Yeah. Ron, I'll let you answer the same question about what you think is happening here with tech relative to the rest of the market. And I want to ask you the question I asked Barry Knapp last hour, which is, would you be kind of in the reopening rotation basket? Are you in the lockdown nation basket? And how does the president's COVID diagnosis affect that, if at all, do you think?
Yeah, well, I was in the rotation basket. I was in the recovery basket up until today. And I don't think, and irrespective of how technology stocks are behaving in this session, I mean, given the economic data that we've got, the slowing, generally speaking, that we've seen in the economy, it's problematic in Europe as well. I don't know. I mean, and Kelly, I think this is a tough call. And I think that we're just not out of the woods. I think there are too many open-ended questions, unresolved issues to make a blanket statement about which trade's going to be right in the next month. And so I think we're more likely to have some downside risk from here than upside reward. And so I'd be a little careful just because the headline risk, the event risk, is at the moment a little bit larger, I think, than anyone can make a plausible case for, getting aggressively long in any particular area, even though that rotation play has worked in the last month and a half.
Shepard Smith here. Thanks for watching CNBC on YouTube.